they ended up doing. I picked plus 15 or whatever. The Bucks, and then my main ticket was Falcons, Bills, Giants cover, Rams money line, and then Chiefs. And I'm sorry, not Chiefs. The fucking Packers, and they blew it.
All right. High quality. I'm live right now.
Live right now. Reload subscriptions. Yep. How do I join? Quality is good though.
Which screen do you see? You see it?
I see the trading view screen.
All right. Is it? Hold on. I gotta. Hang on. It look like it's first up. No. Yeah. I gotta. Hold on this one. So I just put this one over here. This one over here. All right. We should be good to go. All right. Let's go. I'm ready.
Oh, you know how to add me in there?
No, I think I have to. No, I don't.
You have to go. No, okay, so go to your Here's how you do it. Go to YouTube. You're on YouTube TV. Go to your profile picture, or go to your little profile thing over there. You hit settings, and then you hit you hit settings, and then you hit is there a manage button? Oh, family share, wherever that is.
It gotta be somewhere in this.
Also is
Well, how you?
and yes, watch it. In this video, I'm going to show you the video here. And here's the subscribe button. On YouTube, you probably already realize that the process is as well as platforms like Facebook. The good news is that adding the multiple guests to the YouTube live is possible. There's now a few options to do it. Some of them are free, some of them are paid. Each of them will have their own strengths and weaknesses. So I definitely suggest to start doing it is limited because it is only 720p or you can start up to 15 guests on a call and you will live. I'm going to bring oh, so basically, you can YouTube live all you want, but you still have to use it. They don't have like where you add
I'm on OBS. I don't know how to do it on OBS.
I don't know how to do that on OBS either. I ain't gonna lie.
What should we do next time? I'll figure out my next video.
You said what?
I'll figure out my next video.
Yeah, we'll just keep going.
All right. Well, yeah, man. Well,
so let's go over some stocks. Let's go over how do you feel about the tech sector? Let's start with there.
Oh man. Hold on. All right. Well, just. So where do you want to start? What's your name? The Qs?
Yeah, let's start with the Q. Let's start with the tech sector. That's my favorite thing.
All right. Yeah. Hey, just mute me in the background, man. I don't like feedback.
All right. Hey, just mute me in the background. That's what I'm gonna do. You shoot. Yeah.
Shit. I mean, tech is tech is tech. I would say though, compared to these other two periods, here, and here, you know, this is the monthly view. So we actually get a roughly around at 30 on the RSI until we hit the bottom here. Boom, boom, we hit 30 here, and we coming close to hitting 30 on the monthly here. Right now, we're sitting at 40.
Mm-hmm.
So this will most likely be a capitulation event. Most likely, probably get a double bottom, and then that'll probably be time to kind of go long. So you should be trading actually above. Damn, they bring you about to roughly 2019 highs. Now remember, they still printed all that money uh in 2020 and 2021. So that didn't go anywhere. I told you it's a factor of the county. That money didn't go anywhere. It's still out there in the market somewhere. It may not be in the stock market, but it's out there. So for us to print all that money and you get prices back to 2019 highs, and then you have to remember all that whole situation with direct indexing. That's why you see a lot of stocks so low compared to the actual index. So just keep that in mind. Just keep that in mind to where again individual names you're going to do better than actually holding the index. Unless you just pick trash and if you not that great at picking names and just buy the index. Outside of that, it's a lot of names that I'm looking to get. We can go over one. Um, shoot. PayPal,
You said PayPal?
one of the names I like. I know that you've seen that law stuff. Yeah, I already know about that. But
You think that you talking about that lawsuit?
no, it's what that whole charging people for them disagreeing with
They
them.
don't even be that, bro. They just be holding money, bro. Like that should be annoying.
They hold money for you?
Yeah, they hold. Let me tell you about the time I almost got shot by Pooh Shiesty. Long story short, we threw a concert with Pooh Shiesty. It wasn't his team, but they booked them. They wanted us to run the tickets through our event. We had to do that shit the same day. These niggas held up 5 racks on our event. But when I tell you,
How long it took?
No. They were basically what happened was this is basically what happened. They were trying to hold our money for 2 weeks. But for no probable cause, right? I showed them the tickets. I showed them our tickets. I showed them our tickets. I showed them our tickets. I showed them everything. I showed them the proof, and they still were trying to hold our tickets. But what ended up happening was I ended up getting connected with the supervisor dude, and he ended up manually releasing all the holds. But like, yeah, bro, they would dead ass
Right.
hold your money for 2 weeks.
Yeah.
Like, bro, they held up. Like, but they were trying to like that's why I don't use Eventbrite no more because Eventbrite only processes same day through PayPal, and I don't like that because I don't like PayPal. That's why I don't use it.
Hey, you want to talk to damn, you can't talk to the stream because that's okay. All right, it won't be
Yeah,
like that.
I mean, I could if you put me on like a Google Voice call.
I don't know how to.
Just open up Google Voice and just put it in, and I can talk in. Add me on your screen, and I can talk into it. Or like a Zoom call, or you can send me a Zoom link, and then you can I just talk into it. Share your screen. Say it right there, though.
You know, I got my phone by the speech company. I got my phone right by my computer, so you can just actually just talk into it and hear you.
So when we talk about payment processors, let's talk PayPal, Square, and let's talk PayPal, Square, and Visa.
All right, so PayPal. The reason I like PayPal, it's gonna be here for a long time. The Square is kind of really not that great. I got a story about PayPal. I remember when I was running one of my businesses back in high school. I was running one of my part of my lines was I was doing a lot of pre-ordering. I was charging people for a pre-order for J's, and and business going real good. Had consistent clients. You know what I'm saying? Was getting my fee up front, and they was sending me the full amount up front. I'm like, cool. Man, one day locked my motherfucking account up all because of some age verification crap. Man, I had to refund every man. Listen, man, I had to refund all the clients, bro. I'm like, man, it's some bullshit. So PayPal be tweaking, but that doesn't mean people won't use it. And we're back to 2018 levels. Honestly, I think you can either double buy the 68 right here, or you can break below that. And if we head over to Transpire, that's so many AV blocks. More, it's not cooperating with me. Why is it not full screen? It usually, I don't know what the hell it is. Oh, man. Exactly right. No? Whatever. I'm not about I don't know. It's not cooperating with me as far as just charging over here. But this is where we are.
Mm-hmm. I see you.
You kind of in the middle of a vacuum. This is your 2016 AV WAP.
Mm-hmm.
Which one? This is not this wrong thing. Time for a new computer. Man. I don't even know what to. This is where we are. Now again, this right here will serve as a vacuum. I doubt. I mean, you if it get bad, getting at 36 would be a steal. I doubt it get there. Though. Um, I doubt it get there. I mean, I wouldn't. I really wouldn't. I really wouldn't put it past it. But um, there'll be there'll be a great ad. They need to fix the UI, man. I pay too much money for this shit, man. I pay $8 a month for this, man.
Hey, that's another thing I want to talk about. Fiber optics. Companies that make those. I really want to invest into that.
Yeah, I ain't took the fly. They should give you the option to delete indicators off the main screen. I don't understand why I have to go to settings. Hey, collapse. Thank you. So like I said, I doubt we get there on the weekly at 36 print, but compared to where we are trading, I mean, you know, that's not that great. Um, so it's getting cheap. I would say it'd be interesting if it breaks again. It's $38 here. If it breaks below there, this can serve as a vacuum, and then from that point, it's in limbo. I won't be surprised for it to get down here on a bad situation, economic situation. It can get there. So don't rule it out. But then at that point, you'll be trading back at what 2016 levels. So don't rule it out. PayPal's a good ad. Square, not really too a fan of. I think when they try to align their business with two things that's affecting the stock. Three things. Slow down the transactions for Cash App. Them aligning themselves with crypto. And also, too, because businesses have been closing and business was been slow for a lot of companies, them actually buying a new payment point of sale system, it's going to be down. So there's a lot of things weighing on this stock. I think you're going to okay. If we look here at the support line, you had this big breakout in 2018. It went public in what 16. Don't rule out a move to 32. So you can actually get PayPal and Square in the same, at roughly around the same price at that $30 range, 35, 36 in that range.
Mm-hmm.
Again, it's gonna be you may actually be sideways.
I cannot wait for that.
I mean, it happened.
I know. I just can't wait. Man, that's gonna be so great.
Oh yeah. I mean, it'd be so cheap.
You ain't got no choice but to buy it.
It'd be so cheap.
$30, boy. You gonna put a rack on that, man? Shoot, you might be rich in 5 years.
I may actually go all in on a few. I can just go all in on one name.
I'm gonna spread out. I'm gonna spread it out.
I need to spread out.
I want to go all in on one sector.
I need to spread it out, but I'm like, damn. If the name,
this
name, if this,
can't beat that. Even if it gets back to 100, I mean, damn.
If this, it'd be, I don't know, man. If the drop come that quick, you may actually see me move. I probably won't even buy stocks. Bro, I was such a degenerate. I'll probably buy 2020, 2025, 2025. It's in the money. Man, hey. I'll buy I was saying like, damn, what if I just went all in on 2025 in the money spot call options? Man, that'd be something. That return would be something.
Hey, stay right there. Give me like 2 minutes. I need to set this link up real quick. Give me like 2 minutes.
For sure. Yo,
I had to make this link. My bad. No fucking way. Them hoes sold out that quick.
for what? Oh, for
Yeah, them tickets, bro. Our tickets be selling out so fast. That is crazy. 45 already reserved.
oh man.
Jeez. Bro, we be selling tickets so fast, bro. Like we will sell $4,000 worth of tickets in 1 hour.
Damn.
Yeah, that's where I literally been. Bro, I'm telling you, bro, I've been making the money, but like this stock stuff really like I literally let me tell you exactly what we did when we talked about the CPI coming in hot with the food and energy. I made like 15K from the door. I took 10K. I took 9 of it and I put it on puts.
Okay.
And then I took the money, and I just cashed out, and we're going to take the money, and we're going to go book like a big artist, like Dirk or something.
Hey, don't forget about your taxes either, man.
Don't worry about all that. I have a good accountant, and stuff's getting written off.
Well, you can't write off capital.
But also, you have to remember, we passed our ticket sale taxes off.
Oh, okay.
To the consumer, so they pay our taxes.
No, I'm talking about on your stock, on your.
On the stocks? Yeah, of course. Yeah, I keep enough put away for that. I'm already gone. I pay that every year. Look, you ain't gonna tell me. Uncle Sam gonna get his cut. Dang, the Eagles up 14-0. I lied. I thought the Cowboys could do
it. So yeah, that's that. I didn't even add this right. So any other names? We got Square. We cover PayPal. We can cover.
Let's start with the microchips. Let's go over LRCX, AMD, Nvidia.
This is just equipment. CapEx is being slashed, so you do have this. It was something that came out to where a lot of I think it was at Lam Research. Probably maybe it was another company, but because of that,
I believe it was. I think it was Lam Research.
Anyway, a lot of the executives quit the same day that bill that shit passed. Well, they said they was tightening down on chip manufacturing in China. That slows a lot of stuff up. So it was one of these companies where a lot of the executives just quit the same day because of that. It's kind of like you choke off China from semiconductors. And that's a big problem. And I've been telling people. And not only did you have that Ethereum thing where that was more efficient, we don't need as much GPUs. It was so many people with PCs, and they just kept putting on supply. And you get to, I told you, we pulled so much demand forward. Maybe over the next 5 years, we pulled probably 5 years worth of demand in 2 years.
In 2 years, yeah, I was saying 2 years.
So now you're getting a lot of stuff. You're getting all the new stuff coming onto the market, all the stuff that was on backward coming in, but you getting everybody selling stuff too. So actually, I'm looking at either I'm probably buying a laptop, but I'll probably build a quick PC for that crib. Pretty soon, probably next year, springtime, when I'm able to get a CPU, GPU for everything for cheap.
Yeah, I'm about to say I'm looking to buy.
And that's new. I mean, I can go get used stuff, but I'm telling you, just specific new, you can get discounts. So you get discounts now on new stuff. So, I right now I look at the semiconductor space as like every other bubble, man. Like if you remember the biotech bubble, not biotech, but the pharmaceutical bubble. Remember that was a big thing. Not so long ago, probably like 20.
Oh, you talking about with the COVID vaccines and all that?
No, not that. Not that.
About before that.
You had like Valiant and all these other.
Yeah. Okay.
When the pharmaceutical, the drug companies was. It was a lot of M&A going on in pharma land. They would buy the drugs and spike up the price. That was a big thing. That popped. Tech Pop in 2000. Tech Pop now. A lot of startups popped off right now. VC land is very interesting, but um, you probably won't have no demand for chips over the honestly, you can honestly get Nvidia for $35. Think about it. You're gonna be able to get Nvidia for close to $35. I mean AMD, I'm sorry. AMD. Look at this. This lines up. Look at this. This is the monthly, the 200 day. Look where that lines up. It lines up at the breakout. That's crazy.
It does. That's perfect.
That's crazy. This is if you bought up here, I'm holding for the long term. I'm holding for the long term. Okay. Yeah, okay. You're gonna have a lot of long term pain. Because it's not passive. You have to be active with this. You have to understand the story. There's only I think people forget the market is full of participants. The market is just doing its thing. No, the participants are doing their thing. Without any participants, there is no market. So this is 70. Think about it, 78% off the highs if it gets this up. 80% off AMD. $80 off AMD. That's crazy. I don't mind scooping up a few shares down here, but gaming won't be the thing. It most likely be data centers, but it wasn't data centers. Just wasn't the thing that allowed us to go up this high. It was phobia. It was FOMO, chasing 2020 demand, 2021 demand, 2022 demand, 2023 demand, 24, 25. Because they do a DCF over 5 years out. So a lot of those models didn't forecast the Fed going up on rates. The models didn't forecast demand slowing down. That's what you have to. That's why it's so important to do your own models, because the analysts get paid to put a buy rating on it, not a sell rating. So that's crazy. That's crazy. If you bought in here, you still hold. My prayers go out to you. My prayers go out to you.
Well, I don't have any shares of it.
I'm just saying, people who do. This doesn't look too hot. Again, that's 80%. If he gets to here, 80% off. That's 80% off the highs. That means you gave back all your gains of this whole 20. You gave back all your gains. Since 20, you back off the 2019 highs. Look how long AMD was now. What I will say is they do have market share now. But if we're going to be in an environment where economic growth is going to be slower for the next 5 years, which is possible, to the next decade, you're not going to see a lot of money be in here. You may see some accumulation and bottoming. What I would say is, if you got cash to where you just want to put it to the side, it won't be no wrong with buying AMD and Nvidia at these low prices. Nothing wrong. It may be a while before you see a big return, but if I buy it at 35, and let's just say it go as high as 60 over the next 10 years, that's still a little bit less than 200, double my money. That's still a 30%, 40%. You know what I'm saying? Even if it chop around between this 2020 breakout and this 2019 breakout, that's still a good. You get what I'm saying? That's still a good range. That's a 70% upside. So I mean, it's opportunity here. If we go to the video, look where we are. We broke below. Look, 2020 level, beginning close. This would be a 2018 high. It did this, rejection, came back up, broke out, and went all the way up to about 380, 340. I mean, now you come back down here, wiped out, wiped out. This is a wipeout. It'd be 78% off the high. Complete wipeout. Check out Tesla. Now, this is important. Please put this on your chart. Get a chance. I don't know if they should have programmed this when this do a stock split. These should automatically adjust to the stock price. What's this? I think it was like Google. Now remember, you have to do this times 15, pre-adjusted. So take this price times about 15. You're still sitting at $3,000 a share right now. If you get this at 500 a share, between $25 to $40. Yeah. This stock had to come down to $40 for me to touch it. And that's still expensive.
I want Tesla. Where we at right now? 204. Give me Tesla. Go up a little bit. Yeah, 112. Yeah, give me Tesla around there.
Remember, we just broke a key AVWAP here.
Yeah, we did. I remember. That's why I said, give me Tesla around 100, 112.
If you put it here, now look, right now, you're in the middle of a vacuum. Because you got a lot of imbalance here. Not a lot of value here. So these act as vacuum areas. Now, I think what's this, a 2016 or it's probably a cold below. This is a cold below AVWAP. This should be your first level of support. 180, which we close to. I think we can get. Your next area is actually 156.
Okay.
It's sitting right, and that's sitting right above a demand zone. So you can actually probably get a little bit of a bounce here. But under here, honestly under here, you get to where it'll get here. $70 a share. That's a wipeout. Kathy Wolf on smoke. This is a wipeout. $80% off. If you can get it. But even from kind of like that 150-ish area, 60% off the highs. Wipeout. You bought in here, smoke. If you bought back here, you got ran up and you didn't take profit, you back to break even. If not negative, smoke. Smoke. It's important for you to understand where do you want to be a seller. That's why I keep telling people this is an active game. Is you against other market participants.
And they got way more money than you, so you better move smart.
Or dumber than you. But you have to understand, where are you a seller? What value makes sense to you?
Yeah.
What price are you willing to...
So you're probably looking at this chart right here as a seller who bought all the way down there, and you're like, well, let me get out while I can.
I'm thinking for the long term. I'm thinking for the long... That's fine. I'm not individual equities. You'll get smoked in individual equities. That's why people who think long term buy the index. or their cost basis is so low to where they're not worried about selling right now. If they do own individual names, those are people who sitting and not really worried about it.
Mm-hmm.
But you can't be buying up here and think for the long term. Some of these names that stock price even never even seen the day of light of. So you looking at was 80% off. I'm looking at maybe 50. Because it's a lot of names that it should not have seen the day of light of that price ever. So for a company like Shopify, this was trading at what, 17? Almost 18 before they did the stock split. That's huge. Look how sideways it was for many years. Look at this. Look at that. I'll probably actually play with it down here though. I ain't gonna lie to you. I might.
Oh my goodness, that looks like a penny stock.
Putting a couple racks, putting about a few $100. Probably like. I can take 50 shares right here.
Mm-hmm. What stock is this?
It's Shopify.
Oh yeah, I'll buy. I'll buy. Yeah, I'm with you on that one. I'll buy some Shopify.
Well, look, look how many years it traded sideways though.
Yeah, I was about to say. But I will say though,
at IPO,
because e-commerce is going to continuously grow, I do see a lot of upside. But I felt like Shopify went too fast too soon.
I guarantee you, the only thing that can get Shopify back up to its 170 area, only one scenario. A buyer comes in, takes it private, and by that time you won't even get 170 a share. If you're a current shareholder, you get a little bit less than or the company is so profitable they start buying back debt. They start paying off debt and buy back shares at a high rate. But you have to remember, 2020 and 2021 was the best setup for a lot of companies, especially in tech space. Was the best setup for a lot of companies that they may not never see again in the history of a company. The government sent out checks and told you to buy to have economic growth. Think about that. Everybody everybody had a website. Everybody had a Shopify. You seen clothing brands all over the place. Everybody had a clothing brand. Everybody was selling courses. Everybody was selling stuff. Remember?
I remember. It still be like that.
That was the best setup in the history of the company. You may not never ever get that again.
You probably won't. That's why I'm not big on it. Like
so I wouldn't put that in my model to say Shopify's going to hit $170 again. But if we go back to where I got it highlighted blue, this is from IPO to 2019. If you buy an IPO, that's a 500%. That's a 600% return over a 4-year period. So me getting back to these levels or even under here, I'm a buyer. Why? Because the same story that was down here is going to be the same story if you get back to that same level or same range. And at that point, I have essentially no risk. I don't have that much risk. Think about that.
You are correct.
We already down 85%, 86%. Look at this, 86%. You get back down here, you talking about 94% off the stock. I love this game. Man, that's a buying opportunity. I wouldn't mind sitting here for a few. I I'm able to get 50 shares for $500 and just sit back and forget about it. That's 2 pairs of Jordans. You want to talk about generational wealth? Here you go. Here you go. This is it. Shopify ain't going nowhere. But what made the story good? What made the story good? Over here, it's going to be even better. It's going to be even more attractive over here because all this money got put into the economy that doesn't disappear, remember? And they gained market share over this period of time.
That is correct.
So, this is a great investment. Great investment. Meta is a bit more, I got my pros and cons with this one. But you want to be very careful. It's a buying opportunity for Meta coming up. A real buy. And the stock has already been cheap. But I think you may be able to get this for a 2015 price tag.
Oh.
Look at this. This is what you call fucked.
Oh, it's horrible.
Look at this.
Also, to piggyback off Meta, I'm not Netflix savvy. I'm not.
Oh man, I'm a Netflix expert. Hey, I gave the setup. I'm like, look, y'all can take.
I meant like I'm not big on Netflix in the next 5 years. I don't know. I'm not big on it. I'm not big on it in the next 5 years.
I'll touch on that next. I got some things to say about Netflix. As far as Meta, TikTok, when the economy go, I made a post. I'm not sure if you remember. It was probably a couple weeks ago.
Mm-hmm.
I'm like, during economic recession, some of the best music come out. Some of the best things, the best relationships you usually get during a recession. Some of your best relationships sometimes happen during the recession. The best music happens during the recession. Going out to the club has never been better outside of a recession.
I'm not gonna lie to you. Speaking of the club, like I just said, I'm selling out tickets faster than ever in a recession.
Listen,
I ain't gonna lie.
The club. Listen, I'm telling you, people want to escape so much. Going to the club, coming out of a recession, hey, that's some of the best music. The best relationships, yeah. People getting back on their feet. See, it's making people have to be accountable again. They just can't go home and just lay up and watch. No, they have to work 2 jobs now. Yep. People got things to talk about again. People got things to work towards again. You know what I'm saying?
You gotta have that human psychology reset.
But I got that. I don't need to go through recession.
See, we're different.
And that's what I'm saying. And that's what I'm saying. Like, this reset, sometimes people need this.
Mm-hmm.
So being able to get this for a 2015 price on that, hey man, I wouldn't mind that. This is generational wealth. You want it? You got it.
Hey, this is like I told. I was talking to my it was a dude. You know what I'm saying? My young boy Blake. I was just talking with him today in Publix, man. I was telling him about how, bro, you 18 years old. I ain't gonna lie to you. It's the greatest opportunity of your life right in front of you. Literally. As far as like that you've been able to do something about it.
Yeah. You want it? You want it? They got it.
It's here. It's right here if you want it.
This is look at this.
This is generational, man.
70, almost
I'm buying more QQQ than I am SPY, though.
Almost at 80% off the tick, off the high.
Yeah.
And like I said, even if you go, like, look at this range.
Even if you go back to normal, you change your life. Even if you go back to where it started, you're good. we're
Yeah.
not even gonna account for going past.
Once we come, and I shared that clip multiple times on Twitter with Jim Irons from Margin Call. It's gonna be a lot of money made on the other side of this thing. That's true. Coming out of the recession, a lot of money to be made. A lot of money. You get a lot of misallocation. Once people start putting money back into the stocks and the markets, you're gonna, man, you ain't gonna have a care in the world where a red day down 8%. You're not gonna have. Ain't gonna be. It's not gonna be a word for you. Why? Because your cost basis is so low. Think about all this money over here that was a printed check, and then put the same price on it over here. Man, good money.
Bro, you ain't never lied.
Good money. Now, I pitched this stock back in 2017 in my stock club, in my investment group. I had $120 price target on it, and it actually exceeded that. Let's go back. That's kind of where I really anchored it to. Was over here. I pitched it like probably it was over here somewhere. It was over here. It was somewhere over here, like September 17th. Over here. So it's trading this range. I think I actually got down here. One of my big things I pitched right here though was I'm like, in the next 2 years, you're gonna see a lot of theatrical releases for Netflix. And it's right. Funny part is, it's right around the time where I think Bright came out. That was their first kind of movie that they first movie that they put together. And here you got this big boom. And I told y'all it was a lot of meat over here. And honestly, they got earnings coming up. And just like Apple, I told y'all if they miss, I'm going to have a big ass steak. And I hate steak. I got the place picked out. I know where I'm going. I know what steak I'm getting.
I know where I'm going.
This is a lot of work. It's still a lot of. You can still short this. This is still shortable. It's starting to break down. It can get. Don't discount this. They're gonna miss on that million sub growth. That's gonna knock the stock off a cliff. And I don't think their ad tier is gonna be profitable. That much profitable as people make it out to be. Getting this for again, yeah, if you're able to get this in this area, buy it. Buy it. Netflix ain't going nowhere. Buy it. You able to get this in this area? Buy it. Let's do one more. Let's do one more. Let's do Disney. No, I'm saying let's do one more streaming service. I can do a couple more streaming services, but Disney. Disney on its way to the 200 day on the monthly. That's $80.
Disney is in my report.
That's $80.
I do think when parks open and everything, and then Marvel movies are gonna continue to dominate. I do have Disney.
You wanna be able to get this for a 2014 price,
which is around
$80.
I'll take that. Give me Disney. I said Disney under 100.
Now, what I also like to say is you cut it in the vacuum so it can actually undershoot to about this 60 area. Because parks still underperform. And if
that's fine. I'll just dollar cost average
in. Anywhere in this area is a buy. Where it's low liquidity. That's a buy. Give me Boeing at 7. I'll take Boeing at 75. 75 none for me. But we going to like
well, Boeing, okay.
What was it called? Discovery. Man, what was it called? was like DISCVA. The Discovery app. Man, what was the name of the ticker? I forgot. But there's some other streaming services out there. Parks may not do well for too long. Six Flags, I'm not really a fan of. Keep going up on the prices. What's another name? Give me another name. Google. Another class. Really doesn't matter. 77 is a good place. Actually, it says support here, so under here, well, it already did, but you know, so yeah, you want to put an AV WAP on here under that, you know, tech bubble, bottom around here, the AV WAP on that, too low. So yeah, bring that to me. This is where it's at on the weekly. If it get under this, so it's 200 sitting where the demand zone is right here. It's 80 something. Under here, it can move down very quickly into the 70s area. So you can actually, this would be an ad at the 70 area. This would bring you back towards this kind of 2020 high. It's a good ad. It's Google. It's a good ad. It's a good ad. Any other names? Oh, we can get into garbage. The garbage. DKNG. There's garbage. Trash. Any other names? I can't hear you either. So.
Oh, my bad. I was saying that. Yeah, I'll throw like 2 or 3% to them. But until sports betting is nationally legalized, garbage.
The industry is tough, so it's just trash. I would never put money here. I would never put money here either. Trash. Well, I would put some money in though. Maybe. Touch on banks. I like banks. It's holding as well. A shit show get you here on the monthly view. But for now, it's holding its shelf. For now. So it's holding, it's a lot of demand here in this kind of $100 area. Little stuff. AXP got downgraded. But you want to own this one during a recession anyway. You want to own this during a recession anyway. And the shit show gets you to this 120 area. This is all from this 200 area. But don't forget it's the gap here. So if it break under this demand zone, you can get this gap filled. So this would be at $100. You wanna own this. You wanna own this. This will get you back towards. Yeah, you wanna own this down here. Probably one of the greatest trades. So you see this? I bought 98. Listen, this how much of it did. I bought $95 calls when this thing was trading at $20.
For
Discover Financial.
Oh, I know.
They were so illiquid. They was illiquid. Oh my God. Wasn't no liquidity in them boys. No liquidity. I ain't get no liquidity for a good year.
Sometimes you just gotta keep staying patient.
No, I'm just saying they was just this thing how far out the money that is.
Yeah, that is. That's far out the money.
Oh my god.
Far out the money. That's so far out. That's like what? Like you a fortune teller out the money.
I make good money on them. I make some good money on those. If it breaks below here in this 83 area under here, you can start to kind of feel down. Not really too excited about the space. I guess we can touch on SoFi. I want this one. I like. It's a tough one, but this is gonna be an acquisition target in the future. I'll play with it. Probably throw $100 here or something. Try to play with it. But this is a good ad for me. I like this one. Redfin. Man, it's like bright. You see this? Oh my god, the game. Look at this.
Wait, you said who?
Oh, oh my god.
Wait, what you said?
Look at this.
I know I'm looking. I said, what you said?
The game. Hey.
Oh, you talking about the Cowboys Philly?
No, I'm talking about the market. Look at this. Look, this Redfin. This is a 97%
clap.
Clap.
Good night.
Dusted.
That's it. Bye bye. Stock minus will not exist.
This is crazy. But you know what? I'll take a gamble. Hey, at a certain price, I'll take it. You know what? The housing thing just getting started. I bet y'all be able to get this about $1. And not about 300 shares. And that three and hey, coming out of this thing, that $300. If this thing can get back at $15,
I'm weak. Hey, you might just take off.
hey, you wanted the opportunity, you got it. You got what you asked for. Damn,
They said we missed the COVID surge. Okay, here you go.
Zillow. 20 man, look.
Yes. Twillo. You said Twillo, right?
Zillow.
Zillow, yeah, Zillow's on my list.
Let's get to an area where I like.
What do I have Zillow around? I have Zillow. I have this marked actually.
Open door. Garbage.
I have Zillow. Get me. I got Zillow around 15. Around 15 to 20. That's when I'll start loading up.
I mean, we go into builders. Toll Brothers, those are coming down. You got Digital Realty, right? The dividend decent. It's a 5.3% dividend. So at a certain price, this makes sense to me because they do like server farms and shit like that, server warehouses. So at a certain level, this makes I won't be shocked if you get. I mean, with a 5% dividend at a decent price, this gonna be too bad of a hold if you want some exposure to like kind of REITs. It's gonna be that bad. The other thing you want to watch out for is uh, this right here. Watch out for that here. And there you kind of, beat down here. But again, a 5% dividend, that won't be too bad. That won't be too bad. Thermo. TMO. I think they headquarters here, actually. See, this is why it's important to pick them, because you're still way above COVID levels. In fact, 2021 levels. Thermo Fisher, they do analytic instruments and equipment, reagents, and consumables, software, and services for research, analysis, discovery, and diagnostics. It operates through follow segments, life science, whatever. Life science solutions, analytical instruments, special diagnostics, laboratory products. So honestly, this is one on my radar. I'm not sure if you like this one or not, but this one is. I'm looking at this one. At a certain price, I really like this one. Another one is Intuit. I already said. I'm not sure how to pronounce it. Intuit. TurboTax. They bought Mailchimp email marketing, the biggest email marketing platform. So again, at a certain price, get roughly a 0.8% dividend. You get me back to these 2018 levels, 280. I'm a buyer. Yeah, so it looks like it wants to break down. Yeah, about 280. So that's perfect. It lines right up. Got a demand zone right here. It's a lot of wipeout. Adobe. It's gonna be coming out this thing again. It's gonna be great. This is the best Adobe will ever probably get up here, just because again everybody was in cyber, wanted to be creative, X, Y, and Z. So we're back at 2018 highs here.
That makes sense. I have Intuit on my list as well. I was looking at, I have TurboTax. I do not, but Intuit I do.
Well, TurboTax is Intuit.
Oh, I didn't know that was all part of each other.
Yeah, well, they bought Mailchimp last year.
I do. I remember that acquisition. I do remember that.
Yeah.
Yeah, because I don't use Mailchimp anymore.
But they're still the biggest platform.
It is, but it sucks when you can get the same service on Wix.
Yeah.
For 1/5 of the cost.
Yeah, I understand.
If you know what you're doing, because you can buy 1 million emails a month on Wix. But again, Mailchimp is still a very successful platform.
Yeah, this Adobe recurring revenues, again, no dividend, but they do have a recurring revenue business. This is probably the best way to ever get up here, because everybody was in house being creative, X, Y, Z. So to get back to here, that's not too far fetched. Where you are on weekly, well below everything. You 260 is your 100-day. 149 is your 200 on the monthly. So between here, under here, look out below. This is a complete wipeout. This your AVWAP just to get you to your 2017 high. It's a lot of wipeout. It's a lot of opportunity. So don't discount it. Adobe. Any other? Once we do retail, Target falling off a cliff, which is hysterical to me. I won't be surprised if you get it back to this 110 area. And if you really wanted it, 84 area. It's a lot of sideways.
You said, but which one? My bad.
Target.
Oh.
So this 84 area, this is
Well,
Target was trading. Target. Look at this.
Target. I'm gonna get Costco too.
Target was trading sideways for many years. Look at this.
Yeah.
It's going to take, and that's why I keep trying to explain to people. Coming out of a recession, it's going to take a while for these companies to get back above to or even close to where they were. The shit is resetting. Shit is delayed. People going back to work. That's disposable income. So don't expect sales and earnings season to be. You want to get to a point to where in this market, earnings seasons won't even matter. The FinTwit gonna be dead. You're gonna hear you're gonna be silent like it was on Friday. It was very quiet. And FinTwit has already been quiet. You don't hear a lot of the crypto stuff. You don't hear any NFT garbage. You don't hear about the trash companies that they was promoting last year. AMC, all that garbage.
Good.
All them SPACs, all them garbage.
Stocks are back.
You're gonna see, and by the time this process finishes, you're gonna see people who survived only on FinTwit. And you're gonna see real stock picking, real analysis on FinTwit. That's all you're gonna really see. A lot of macro people, a lot of analysts, individual investors who just know how to pick names. That's what you're gonna see again. It's gonna be a very long time before you start seeing rocket ships again. People, all crypto millionaires got wiped out. SPAC millionaires wiped. NFT millionaires wiped. There's a bunch of real estate flippers who got caught, who in a world of trouble. There are a lot of people who bought a bunch of speculative companies, speculative names, wiped. There's been a lot of wiping. So the sellers of those names at high prices, that money, you won't see that money come back to the market. It's going to come back to the market to where people are going to have enough money to play. So that's how you get those stage one bases, those accumulation stages, to where it's sideways for so many years, but my cost basis is just so low that I probably already seen that a double or not triple before it even breaks out. I'm probably already up 40 or 50 or 60, 70% before it even breaks out of the stage one base. That's not all-time highs. That's just a stage one base. So if I
you're already starting to see those FinTwit guys that were talking crazy on
right
Twitter.
here.
You don't see them as much anymore.
So you got this accumulation phase.
You said what?
You got this accumulation phase in stage one. Then you got this breakout where it broke out above the 30-week moving average. You can use any indicator, but the stage two is when it's up. Stage three is when it's sideways after a big run up. Stage four would be it declining. And stage one would be again this accumulation basing out phase again. So you really want to start selling when it starts going sideways. After a big run up and it starts going sideways, it's time to start taking profits. I don't want to be in 4, and I definitely don't want to be back at 1 with a position I bought back here, or with a position I bought at stage 2, or a position I bought at stage 3. So by the time we get, and some of these names are already there at stage 1s, and it's going to be probably many years in this stage. But by the time we get here for the majority or the indexes, It's going to be quiet. It's going to be very quiet. And what you want to start watching is institutional buying. Now, good thing I already see it. That's just what I do every day. But you won't know. That's why it's important to watch macro. So when PMI starts to bottom out, by the time the Fed start cutting rates, you're gonna finish this stage 4 to the downside. So that's why it's important. Okay, if I'm able to get a good company at 2015, 2014, 2016 price, 2013 price, that's enough. It's kind of like you exalt the sellers. You know what I'm saying?
Yes, I do actually.
You exalt sellers.
After a while, it's kind of just like, all right, it's not worth selling. Let me just hold on to it for a little while.
You got that, and you got people who have to stay long.
Mm-hmm.
That's why I tell people, don't listen to nobody who has to stay long. They have to stay. They can't short. They can't go to cash. They probably max cash position is right 10%. But some people some firms, some funds is 5%. So if you're a manager who only can be long, I can't really listen to you as much because you only can be long. You can't be short, which means you can't strategically play it. The only way you can really play it is selling into momentum and getting into names that's so cheap. That's about all you can really do. But somebody who can both be long and short, I gotta hear what they gotta say because they can really play it.
True.
But again, they know they want to buy. As Bears State son, they want to buy. They just ain't about to buy a beer. So when you got a bunch of people who only can be long, they're going to give you this buy story the whole way down.
True.
CNBC been telling you to buy the entire way.
They've been telling you to buy the entire way down.
That's all they can do.
They can exit.
Well, no, they can't.
The entire way down, so they can get out.
Well, sure, they can probably exit a position or reduce, but they only can be long.
I don't need a bag.
And most analysts and portfolio managers, especially at funds that's long, they don't really look at valuation too much. Not that much. So, yeah, you get into a lot of those stage 1 bases. Walmart really not a fan of. They gonna be in a lot of shit.
I'm not a fan of Walmart either.
Well,
I'm gonna buy Target and Costco.
I'd rather just buy. Honestly, I'd rather just buy Costco.
Yeah, I'll just buy Costco.
Don't even buy Walmart because Walmart didn't really start making this big move until Clinton signed that trade deal with China. So now that we moving away from Chinese production, they gonna be in a world of shit. But yeah, I mean, this wasn't really that hard to spot. It got too expensive. We got extended. Got this head and shoulders up here with this big, huge. I guess you can call it a bull flag on a monthly. If you want to, I guess it's not really far fetched. But under 402, you is gonna get this move back down to about 330. 340. Put it on here. Yeah, so it looked like it closed below its weekly 100 day, and if it makes a move to the 200 day, that's about 374. So that lines up to where kind of that 2020 range, right where it broke out, which is a huge move. That's a little bit. That's about 50% off.
I'm taking 50% off Costco. I'm cool with that.
Cause they got recurring revenue.
Yeah, like it's Costco, man.
Yeah, membership.
You know what I'm saying? Like some things you just don't got to think about.
And you get that 0.7, that 0.8% dividend. So again, it's a good name. One of these names I want to see knocked off his throttle though, knocked off his throne is Chipotle. Ironically, you had Chipotle, but getting his name off this rocker back down to that 765 area, I won't mind. 2015 high. On a weekly basis, trying to hold in there. Well, don't be surprised if it moves down to that $1,300 level, which is still, I mean, fucking expensive, but you know, look like it's in the middle of a. Well, I doubt it. Let me say, I doubt it. I think during the recession, though, those $15 polls gonna help this miss earnings a couple times. Should get it down. So
All right,
that one been
I gotta get my folks for a little bit.
All right, man. Well, yeah, that's been it. That's been a lot of names.
Yeah, I'm about to say that's a lot of names we going over. You know, Costco, Boeing, Disney, Discovery, Meta, Tesla, of course. Maybe LRCX down the road. Maybe D King down the road a little bit. But yeah, you know, overall, and Intuit. I'm sorry.
Intuit, Adobe, Discovery,
yeah. I
American
actually
Express.
will take some docu.
Nah.
I will take just a small piece of docu just to see what happens.
The problem with docu,
honestly, I don't understand why it's a stock, but you know,
it's a business, but you have to take it for what it was before COVID. And then in that case, it was trading sideways.
Yeah, that's true.
It's kind of like I'd rather put my money elsewhere. Like
Yeah, I feel you on that. We'll see. Either way, we'll talk more. We'll look into more things. I still have more things I need to research, so we'll make some more of this. It was great. It was a great talk, and shit. We out.
What's up? Y'all have a good one.
Right,
see y'all next Sunday.
Yeah, probably not next Sunday. It's homecoming. So.
Yeah, I know. I'll be live though next Sunday. So.
Oh shoot, I'll probably if I got time, I'll hop on. But I'll definitely say we should do these more often though.
For sure.
Some lives, yeah. So.
All right, man. Let me hit this gym right quick, man. You know what I'm saying?
Yeah, I hit the gym earlier today, so I'll let you.
For sure.